Flood zones can have a massive impact on multifamily investments. But the problem is, many investors don't fully understand how flood risks, insurance costs, and regulations affect their deals. Buying in the wrong flood zone can mean higher expenses, financing challenges, and potential losses if a disaster strikes. Today, we're going to be breaking down everything you need to know about flood zones, how to evaluate risk, and what it means for financing, and how to make smart investment decisions moving forward. John, it's great to be here with you.
Great to be here, Mark. This is a big topic and one I'm definitely looking forward to diving into. It's an area that if you just move too quickly, you can make a massive mistake in your investment decision making. So really excited to dig in today.
Yeah, definitely. I mean, from a convenience standpoint, anytime your property floods is highly inconvenient. So
That's
it's not like an overnight thing. You just, everything just goes away. You got potential mold that's coming in, and then you got to repair it. And it's just not only that, I mean, there's a huge amount of expenses as well. So anytime you can mitigate a huge inconvenience and lots of dollars coming out of your pocket, it's one of those preventative things that will save you a lot down the road. So we're going to be diving into everything flood zones. Now, just before we do, John, for the listeners out there, go to fulloutinvesting.com. We recorded a video that talks all about our 10-step full out process, how we mitigate risk when we buy our deals. We talk about the market cycle and where multifamily is today. And we also have a sample deal on that landing page as well. So if you go to fulloutinvesting.com, you'll be able to check that out, and you can easily book a call as well. Once you watch that video to ask any questions, you can go ahead and book that with myself as well. Go to fulloutinvesting.com.
Yeah, absolutely. Give yourself that edge. At the end of the day, this video is going to not only educate you about how we specifically do these deals, but it'll just give you a great overview of this style of investing and give you the information you need to make an informed decision. So highly encourage you to watch it. And just a little pro tip, you can change the speed. So like if you're like me on Audible, Mark, I listen at 1.5 speed, it's just the speed I operate in. So investors, you can do that as well on this video if your time's a little tight, but we really encourage you to watch it. You'll learn so much and make once again, help you make that really good decision.
Yeah, I mean, John, we get a lot of investors now that we're speaking with. They're like, can you send us a sample deal? So what we did was we said, okay, we're going to put that on the landing page, and we're going to actually explain everything from start to finish. We're going to be talking about the markets and how we get a competitive advantage, and in a very, we'll say, condensed manner. And so I took away all the fluff and recorded that video there. So go to fulloutinvesting.com, and it'll give you a really good understanding of the types of assets that we are taking down. So, John, let's talk about flood zones. Why are they important, and why should we even be talking about them right now?
Well, if your property's in a flood zone, it doesn't mean it's a bad investment. It just means you need to be aware and take proper precautions. So that's number one. But number two, flood zones are everywhere. People maybe naturally think, coastal regions or things like that. But for example, I'm here in Metro Atlanta, and due to poor infrastructure, downtown Atlanta has a lot of flood zones, right? So it's not always close to water. It can be really anywhere. And so it's just something you have to get into the habit of as an investor, of really digging into those flood zones and having that deep understanding and knowledge, because they're everywhere. You could be up on top of a hill somewhere, but if there's a creek running nearby, that could potentially flood. So it's not just near coastal regions. So this is something that's ultra critical for investors before they make a buying decision.
Yeah, I think that's a really good point. I mean, look what happened with North Carolina. I mean, who would
That's
have
right.
expected that, and the kind of damage that it did? But, people think that when it comes to flood zones, it's like anything on the beach, if it's close to water. And the reality is if you have retainment ponds, you have any sort of bodies of water close by you, I mean, that can be a real source, even if you're not by the coast. And so, your elevation is obviously a very important part of that. But checking and making sure, if there's, we'll just say, the history of the property as well. And we're going to be diving into that today. So why are flood zones important?
Yeah, so flood zones are very, very important. What a lot of people immediately think about when they think of flood zones is coastal areas, right? And that's intelligent. I mean, that's an area that probably has higher likelihood of being in a flood zone. But for example, we own assets in Florida, one in particular that is, no flood insurance required, no flood risk. It could happen, right? And here's another factor you have to consider: these flood maps are redrawn. and so a historic storm comes through. And an area I think a lot about is the North Carolina mountains up near Asheville. When Hurricane Helena came through, there was just so much rain. And, I spent a lot of time in Asheville. It's close to where I live in Atlanta. It's actually one of my favorite little weekend getaways. And, you're up in the mountains and you would never think flood, but historic floods that not only wiped out thousands of homes, but roads and major infrastructure. So flood zones aren't always just in coastal areas. For example, I'm in Atlanta, and downtown Atlanta is highly prone to flooding, largely due to some poor infrastructure that hasn't caught up with the population growth. And so, you might have a detention or retention pond near your house. You could have a river or a creek, and these things could lead to flooding. So it's really important to slow down and not just ignore that component when you're making that investing decision. So at the end of the day, a flood zone can mean higher insurance premiums, certainly. It can mean reduced financing options. Obviously, you could even be looking at additional maintenance, not only risks, but just maintenance items preventatively that you have to factor in. And then, the fourth thing that I think is really important for investors is being in a flood zone could potentially limit your buyer pool down the line. So very critical that you have an understanding of where your property sits and how that zone impacts those four things I just mentioned.
Yeah, 100%. I mean, we have a property down in Naples, Florida, and we're about 10 minutes from the ocean, but like one street over got flooded, and everywhere near the coast. I mean, we had friends where the whole first floor was just covered in water, and water does some pretty, we'll say, it wrecks buildings very quickly, and it can be very destructive. And so making sure you're doing your due diligence. I mean, that resale point that you had mentioned, John, is really important because, going in, it's like, okay, you get insurance on it. That's one thing, but what's a future buyer going to think, and how is that going to limit your buyer pool? I think that's so important when you're going in. You got to be, we'll say, factoring that into your decision and not rushing in, because I mean, we see this a lot where you have an investor, they bought a property and they're like, oh, it's in a flood zone, and they just moved too quick. They thought it was a really good deal, and they moved, but they didn't slow down to actually do this due diligence up front. And it's an easy thing to overlook if you're not experienced.
No, it's so critical. And, when you get into, insurance and things like that, we're big believers in being overinsured. And when you're in a flood zone, you're somewhat handicapped in that regard because, we're going to dive deeper into this, but there's some federal programs available. There is also private market options. So, being very thoughtful, working with a great insurance broker and structuring the best coverage that you can get. And, candidly, you might even have a combination of public and private insurance just to make sure you have that coverage. Because at the end of the day, it's great that you have replacement coverage, but if your building is uninhabitable and you cannot have tenants in there paying, now you have loss of income. So it's not just having flood insurance, it's also having proper coverage for, downtime, right? And that loss of income that can occur. So, it's not something to take lightly. It's not something just to throw to your insurance broker and let them worry about it. This is the time where you slow down and you ask a lot of questions and you really get deep into the particulars of your coverage. And, you may find that depending on the property, maybe that kills the deal potentially. And maybe it's one you have to walk away from. Now, to be clear, buying deals in flood zones is something that has happened before. I mean, we have a deal today in Venice that's in a flood zone, but we did the proper mitigation things along the way and, worked on getting the good insurance in place to mitigate our risk there. So just because it's in a flood zone doesn't mean you walk away, but it just is a time to be thoughtful.
Yeah, and there's different levels of flood zone. Like if it's 1%, it's like, is that really in a flood zone or not? You could say it's not, although there's a 1% chance. So technically, yes. Is it in a flood zone? Yes, but very low probability of a flood. And so is really important when you're getting insurance and you're going through the quoting and the bidding process, is that you work with a really good insurance broker, because it's one thing getting covered for, we'll just say, the damage that it's done, but for example in multifamily, when you have hundreds of residents, well, if there's a flood and it's coming into the building, the residents can't live there anymore. So they're no longer going to be paying rent. So not only is it you got to be covered for looking after the renovations, which actually could be taking months and months and months, where it's not an overnight thing, but it's also loss of income. You want to make sure that that's factored in to the overall quote. And that every sort of scenario that comes up, like if it's a named storm, for example, if it's like a hurricane, some insurance companies will say, listen, for a named storm in particular, we're not going to cover you with your regular insurance. You have a higher, we'll say, premium that you need to pay if that actually comes in as a named storm. And so we'll just say it's really important you have a really solid insurance broker that knows their stuff, that tells you everything from start to finish. Because if you don't, and you all of a sudden a storm like this comes and you are out, hundreds and sometimes millions of dollars because you didn't do your due diligence, well, now you have mud on your face.
That's it. That's right. And when it comes to that insurance broker, yes, they need to know the insurance markets, but they also have to be familiar with the lending side. So, for example, the majority of deals we do at Faris Capital Partner, we get our loans from the government-sponsored entities in the United States, Fannie Mae and Freddie Mac. They typically have the best rates, and they love multifamily. But they will lend in floodplains, in flood zones, but they do sometimes have additional requirements that the insurance have. So that's a factor. So your insurance broker needs to be familiar with those government-sponsored entities and their particular programs and how they will react to these different flood zones. So that's number one. You also have to keep in mind that, some lenders may even require some reserves or even potentially a higher interest rate to offer a loan on that property. So you got the insurance and you got the lending side. You also have to understand some banks won't even lend in certain zones, and we're going to get into these zones. And the ones that we would absolutely avoid are typically the ones that the lenders are a little more trepidatious about lending on. And so, it's about having a clear line of communication between your lender and your insurance broker. And then once again, that insurance broker that already has that institutional knowledge. So they're a step ahead. So we're not, finding out, on the last day of due diligence that, oh no, your insurance is actually going to be $400 more a unit that you didn't anticipate, because that kind of a number can kill a deal, right? And kill those potential returns. So it is a process you have to take a lot of time on and spend a lot of focus on to make sure you're getting the best possible coverage, while also aligning with the lender's needs.
John, why don't you go over the last example that we had we got a couple quotes and our insurance broker actually presented. Why don't you go through that?
Yeah.
I think that's such a great example of having, some insurance brokers that don't want to do the extra work, and then having somebody really good that can just come through in a really big way. Why don't you share that most recent example we had?
Yeah, so absolutely. So our property in Largo, Florida, is actually in flood zone X. I'll quickly define that, and then we'll go in deeper into those different zones in a moment. But flood zone X means that it is actually not in the 100-year floodplain, or it is protected by a levee. So it's a lower risk flood zone. So it means it could flood, but federal insurance is not required, but you still have to be mindful that it could happen. And so with that, we want to have coverage, even though we're not required by law to have coverage. So we had given
John, just for context for the listeners, Zone X is the best kind of designation that anybody would want to have.
That's right. Correct? That's exactly right. 100%. That's right. But you have to be aware that this property is in Florida, so it could still happen, because, as I mentioned earlier, these maps get redrawn, and every once in a while, a new 100-year storm comes in, and all of a sudden we realize, oh, we actually are. So you still have to be thoughtful about this. And so we were working with an insurance broker that was quite reputable, that was referred by some friends, and the original quote came in very high, and we just weren't happy with the coverage. So we actually went to the real estate broker who had the deal listed, and we were just sharing with him some of our challenges. He said, you got to talk to this guy, Micah, over at Real Protect. And we connected with Micah, and what was interesting is he brought a policy to us that the other broker hadn't brought to us. It was actually a Florida program sponsored by the state called Florida Citizens. And so we asked him about it. We said, well, gosh, we haven't been presented this option from other brokers. And he said, well, the reality is it's very difficult for the broker because it just requires more work. And so really quickly, we learned that, not everybody wants to work as hard, right? And they just want that easy button solution. So they sent it out to their carriers. Carriers came back with quotes where Micah got a little more creative and went around and found the best possible solution and said, look, it's going to require more work from me, a little more work from you, but it's worth it. And so we were able to get a rate come in at about $400 less per door than we had from that other broker. So this is something we always talk about on our podcast, Mark. It's one of these things that's come up a few times, but we don't just get one vendor's quote. You always get multiple quotes. I think that's just a business best practice. And even when you're going for renewals, go back out and shop and just make sure you're getting the best possible rate. And this was a great example of that. So even better news, Mark, because we took such great care of the property and then took some mitigation risk where we could with landscaping, removing some limbs that were overhanging the building. When we went to renew, we actually had a 50% savings. And so just massive, right? And so that goes straight to the bottom line. So, having key lenders, key insurance brokers is ultra important to success in investing.
Well, John, just by getting that other quote, $400 less per unit per year times 104 units, that actually works out on a 5 cap at $832,000 in extra value.
Yeah,
just by doing that one extra check. And so not only is our coverage better, but our actual costs are significantly better as well. And so this is the power of having a strong power team and making sure that the people on your team are able to we'll say, surprise and delight you in a really big way. And so, man, what a great, we'll call it a Christmas gift that we got recently with that recent reduction in our insurance. Man, like that was big time for a Largo property in Tampa there.
That's right. And you mentioned something earlier, but like named storm coverage, people go in, invest in Florida, and this is not the place to look for the cheapest possible insurance. No. You want the lowest rate, certainly, but with the best coverage, right? Yeah. And, having that named storm coverage, I mean, how can you invest in Florida without it, right? And so that's something that you have to also be mindful of. It's not about the lowest rate. It's about finding the balance between low rate and best coverage, right? So you may pay a little bit more, but your coverage is higher. And I tell you what, Mark, I sleep really good at night knowing that we have not only great coverage and replacement costs, but in terms of lost income. So if something were to happen, God forbid, we know we're looked after, our tenants are looked after, and everybody's in good shape.
Yeah. Yeah. Well, waking up one day and realize I wasn't properly covered, that, hindsight's 2020.
That's right.
And so going through with the right experience is really important. So we've learned that. So that's great. So the next, so flood zone X, that's where ideally your properties are located. I mean, it could be in zone AE, which is still pretty good. So it has a 1%.
Yes.
Annual flood chance, right? So it's not, we'll say, a high risk per se area. It's like 1% chance that it will, we'll say, flood in so out of 100 years, there's one of those years on a percentage basis, it flood.
Yeah.
And so
say it another way, it's a 1% chance it'll flood on an annual basis, right? So on a 30-year mortgage, you have like a 30% risk. And so those are still financeable, typically without any major interest rate adjustments or things like that, but with a requirement to have flood insurance. So if you're not in X, AE is about as good as you're going to get beyond X.
You got it. All right. So next we're looking at zone VE. So this is like a coastal high risk area. So this is going to be more expensive for insurance. And so you're going to have some possible building restrictions there as well. So, zone VE, if you have a building there, John, would this be something that Faris Capital Partners would go after if it was in zone VE?
I would say no. It would take an extreme set of circumstances for us to consider that zone. And I just can't even imagine what that would be. And there are things that you have to look at, but when you're in VE, what that means is you're on the coast. And so these hurricanes, typically run in a pattern. And so when you're on the wrong side of the coast, it pushes that water in, right? Because these hurricanes are so strong. So one side of the bay may actually empty out, the other side gets dumped in, right? And so these are areas that it's super expensive to insure. In some cases, you can't even get coverage, and there could even be restrictions on what you can do with the property. So that's not a zone that we would ever really consider. Once again, I can't imagine a scenario in which we would. So the answer I'd say would be no on that, Mark.
Yeah, I'm on the same page there as well. I mean, the bottom line is if you're covered, it's good. But then you just got to know on the back end, we're always thinking, who is the buyer on the backside? Who's going to be buying it and what are they going to be thinking? And so for us, one of our, we'll say, 10-step qualifiers is this a building that we can be proud of?
Mm-hmm.
And down the road, if we're the buyer of this property, we'll say, how much concern are we going to be able to, are we going to have down the road if we're a potential buyer? And so we're always thinking that. And so we love to find things that we can fix during the 3 to 5 year hold period for us. So if we can fix it, so down the road, a buyer won't have that come up. That's a very good thing. But something like this, you're just not going to fix. It's going to be a adverse potential risk that many investors would just say, hey, listen, I'm not even going to go there. And so that's a really important thing whenever you're picking a potential property or an investment. Always think, what is my exit plan? And is this going to attract the largest pool of potential buyers? Because if the bigger the group of buyers is that you can attract, where there's less things that are turning people off, the more upside, the more potential you're going to get, one or two bidders that's going to pay above market value. And that's always our goal when we go to sell.
That's right. It's something we talk about on any deal, regardless of the flood zone. But who is that buyer, right? Who is that buyer going to be? And we know that a smaller unit count may limit institutional investors. We know that if we over improve the asset to a point where there's no value add potential left for the next buyer, that might take out some of the syndication groups. And so it's always this conversation that it's not about the business plan. That's super important, but it's also about who's going to buy this property, right? And how are we going to set that property up to maximize that value? So flood zones are absolutely something you need to consider. And that VE flood zone is going to, very much limit your buyer pool. So hence why we would avoid it.
All right. So what are we looking at? So we have zone A as our next zone. So tell us a little bit about zone A, and then we got zone D after that.
Yeah, so zone A is sort of like undetermined risk. So it's an area where there's sort of some challenges or problems, but typically you don't see that in very dense areas with a lot of population. It's typically going to be in more rural areas where there just maybe haven't been a study, right? And so it's undetermined, and that's another area that we're going to probably avoid just for that reason. We want to operate on data and fact. And when you're in a flood zone and you know what the flood zone looks like, you can request insurance loss runs from the previous seller. Your insurance broker can run those so you can get a sense. So for example, we were recently looking at a deal that's in flood zone AE, but when we looked at the loss runs, and the current owners own that building since they developed it, and there have been no claims in that period of time. So that gives us a little bit more confidence because there's been quite a few hurricanes that have come through. And in the past 5 years, to have no loss runs as these hurricanes have, somewhat increased in strength. And last year, for example, we had 2 that came through Tampa, and this property had no issues. So it's not to say we don't take a cautious approach, but that's ammunition that helps us make a good decision, right? So undetermined and unknown is not an area we like to be in. We like to know from facts and data. And so zone A, once again, undetermined risk, insurance will be required, but you're taking on, that unknown factor, which to us is not worth that risk. The next one is zone D, and zone D is basically unknown. So you have undetermined and unknown. And once again, these are going to be areas that are rural in nature, not a dense area. So just there hasn't been a study there. And this is where lenders will hesitate. They more than likely won't lend based on that unknown, because, that's another thing you have to consider as an investor is, your lender's thinking about this deal almost the same way you are. And ultimately what they're having to decide is if something were to go wrong here and we have to take this property back from the owner and foreclose, we have to sell it, right? And so they're thinking about the buyer pool just the same, right? And the value of that asset. So that unknown is not something they play with. So that's another zone that we would not buy in.
Yeah, right on. So you have the flood zones there. Now, the question is a lot of investors want to know, how on earth do I know what flood zone it's in? And how can I, we'll say, be sure that it's in that flood zone? And is the place that you're going to send us, is it a reliable source of information?
Yeah, so we recommend starting with the FEMA website. That's the Federal Emergency Management Association. And so they're the ones who control those flood zones. So they're redrawing those maps regularly when new storms occur. And so you can go to msc.fema.gov, and you can literally just type in the address and it'll tell you exactly what flood zone it's in. Another resource can be the local county. You can actually reach out to the county planning commission and ask them for any recent flood information. We'll even do some Google searching. If there's a historic flood, there's going to be news articles about it. So you can kind of look at that and see what areas were flooded. When the most recent hurricanes in 23, or I should say in 2024 came through, we had properties in Florida. So we were pretty aware of what was happening, but we talked to our property management team. They have properties all over Florida, which areas experienced flooding, which didn't. And so, we're factoring in that data. So you've got the county, you've got people on the ground, and then your insurance broker, right? That's a great place to start as well. Just talking with them. This is a property we're looking at. Can you do some research? And, if you're working with an insurance broker and they're like, grumpy about doing some of this legwork for you, then you need to find a new broker. I can call Mike at any time regarding any property. In fact, part of our standard procedures when we're looking at a deal before we even decide to, tour it, we reach out and get that number. I think it's no surprise or no secret that insurance is, going up every year, right? And because now we have things like materials costs, they have to look at replacement costs. And so all that gets factored into your quote. So, before we even, once again, book a flight to tour an asset, we're working with our broker and getting in those quotes. So make sure you have that kind of relationship with that power team approach we talked about. So they're right alongside you and helping along with that. So forewarned, right? That's what you want. You want that knowledge before you go too deep into a deal, because I can tell you, Mark, we're very good at it because we have a 5-person investor committee and everybody's looking at everything and making this decision collectively as a group. But it can happen. Sometimes you get a little too far down the path and you kind of fall in love with the deal, and then a little negative piece of news shows up and you subconsciously brush it aside. I mean, we're all human, right? And so having that information before you go out and take those next steps, I would say, is very important. Now, Mark, I'm assuming Canada has similar, resources available, but down here in the US, FEMA is really the place to start, then go to the county level, and then with your insurance broker. Those are the 3 places we check before we make any sort of decision.
Yeah, no, there's different governing authorities when it comes down to flood zones and the restrictions that different areas of Ontario and Canada have as well. So those government sites you can actually go on and check out. And when it comes to Canadian real estate, and so when it comes down to it, the financing is something that you need insurance in order to get finance. And so in order to get financing, you got to have your insurance binder ready to go. So actually calling and speaking to your mortgage broker as well and say, hey, listen, this is the insurance I'm going to get. And here's we'll call it the flood zone that it's in. Does this match what you're looking for? Is this something that's going to be an issue? And so your insurance broker will be able to tell you all this stuff, which is, somebody that's good. They're going to be able to direct you in that. But unless you get that okay, then, the deal's not going ahead. And so this is why the insurance broker that has this vast experience, especially in flood zone, we'll say more prone states like, say, Florida, we want to make sure that insurance broker has a lot of experience in these areas in order to, we'll say, not have any hiccups down the road.
That's right. And there are things that you can do, even say, for example, you find a property in flood zone AE. So I'm going to go back to that deal I just mentioned that, we're looking at that's in that AE flood zone. So that 1% annual risk of flooding, flood insurance required. Well, the reality is these maps get drawn, but they're not necessarily coming out and inspecting every single property. So it could be that your building actually is slightly higher elevation. So you can get an elevation certificate. So you have an engineer come out, they look at the buildings, and they can basically give you an engineering certificate that shows the elevation of these buildings. And that's something you could submit to your insurance broker, who can in turn send that to the insurance. And you can actually go back to FEMA and even request the maps to be redrawn. So that's an area that we're a little trepidatious about. We don't want to go around and convinced to have lower insurance and then find out, then a flood occurs and yeah, maybe one hadn't happened in 10 years, but one happens. So you have to be cautious here, but that is something you can consider, because at the end of the day, you're still in the flood zone, but maybe because of the building's elevation, you actually will get a lower premium. So there are things you can do. You don't have to just accept it. You can take some steps during your due diligence to look at that elevation as an example. Now, once you own the building, or let's just say you own a building and some flooding occurs and now you have flood insurance, you can look at ways to improve drainage on the property. So, our Charleston properties are in flood zone X, but, we looked and made sure, is there anything we need to be considering here that we may need to adjust? Now, these things can be costly. So, once again, this is not an area where you buy and then figure it out. You have to figure that out and make sure that those additional costs still pencil out and make your deal look good. But as I mentioned too, we have public programs, so federal flood insurance, but there's also private carriers. And so where there's competition, sometimes you might get a better rate there. So that goes back to that great insurance broker who's going to look at all your options and make sure if it is private, it still has the same level of coverage that public. And then you can structure an additional coverage to cover that loss of income with a public approach, because the private approach, because the public do not offer that. So if you get that federal flood insurance, there's no loss of income provided. So that's where you might have to get a couple additional pieces of insurance to override that and make sure you have that coverage. But this goes back to, this all has to be factored in before you make your offer, because if you get these numbers wrong, you just said it, Mark, that $400 savings, was like 800 something thousand dollars in value, right? So make a wrong mistake and rush too quickly into submitting that offer, and then that offer gets accepted, and then you get some news about your insurance, you may have just potentially ruined your return. So it's very critical you get this right. And that's why it goes back to, we're not going to play the game of trying to move it out of a flood zone, but we may get an elevation certificate if that helps lower our rates. And there's a provable case that the property will be less prone given the building's elevation. So that is one thing we would consider. Probably not, carving out new drainage and things like that. That's very costly, but it can be done.
What can some of these flood insurance numbers get up to? When it comes down to, premiums.
Yeah, I'd say, $1,000 a unit potentially, $1,000 a unit. So real numbers that you have to absolutely consider. So yeah, it goes back to, it's one of the first things we check. In fact, Mark, I remember, I think it was like our second deal review. That was like the second question you asked. The first was the rent to income ratio, because we're always looking at that. Can our potential residents afford the rent, right? That's super critical. Now we have like a 20-point checklist, but it's like, we're always asking, what's the flood zone? Because it's a very real thing that can have a material impact on a deal. $1,000 a unit, you might have your calculator out, Mark, but geez, that's a massive reduction in value. So it's definitely something you have to consider, because investors, you have to keep in mind, we've talked about this on previous podcasts, but multifamily investments are, 4 units plus, are based on the income approach. So every dollar in expense is a reduction of your NOI. So you need to be very mindful of this.
Yeah, right on. So you can actually go to the city as well, and you can ask about potential drainage improvements when it comes down to water, and they'll be able to give you everything that's coming down the pipe. And so you can actually say, if there's something that's a higher flood zone, but then the city's looking to come in and improve that entire area with drainage, that can be something that's very valuable to know. Maybe those properties in that area have been low because they've flooded in the past, but the city actually has a plan to mitigate that moving forward. So going to the city and not just assuming, but doing your due diligence is something that can, just is a really good due diligence item to do. And that's why it's really important to know your areas inside and out, and know what's happening at the city level and at the state level as well, so that you can be fully informed when you're making your decisions.
I'm so glad you mentioned that, Mark, because I hadn't thought of this until you did. But going back to Atlanta, I mentioned the infrastructure. So a lot of it had to do with a big portion of downtown Atlanta was developed in the 20s and 30s. So it was just a different time, right? There was a lot less congestion. And so some of the culverts that they would build underneath bridges where there was a creek were like this thick, and they need to be like this thick. And so, they made some adjustments. And there was actually an area in downtown Atlanta near Centennial Olympic Park that just experienced massive growth. And so the stormwater just could not flush out as fast as it needed to, so it would create flooding. So they literally tore up a whole section of road and put a giant tank to retain some of that additional water. So an area that flooded in the past now doesn't flood. So to your point, Florida, is a high growth area, has more people moving there than are leaving on an annual basis. And so they are putting a lot of resources into things of that nature. So you may find that some project is happening near your building that will absolutely mitigate some of that flooding risk. So that's a great insight. So county, city, one of the things we do on any of our deals, we call the planning commission, the economic commission, just to try to figure out what's happening in the area. Are businesses coming in? What's in the horizon? But it's a great opportunity to ask about any flood mitigation that they're doing, because to the city, if a road floods, now that slows commerce and creates a loss of income, a loss of tax revenue. So they want to make sure that their area is livable and attractive, and more people want to come in. So often the cities are doing things to mitigate some of that risk. So that's a great insight.
Yeah, right on. So just to do a little bit of a recap here, for you guys, that not all flood zones are the same. And so you got to know what you're dealing with before actually making an offer. A flood insurance costs can be a real deal breaker when it comes down to it. And so you can be dealing with millions of dollars of, we'll say, extra costs when it comes down to what we'll say your expenses are with your carrying costs when it comes down to ongoing insurance premiums. So you want to make sure that you have a very strong insurance broker that has experience in the area that you're investing in, because, they could be, if we're buying, say, in Florida, and you have a New York insurance broker that has no idea, has never done any sort of insurance, we'll say premiums down in Florida. I mean, that's not something that I'm not going to bet on them, right? And so you want to make sure that you have strong support there. And then you want to make sure that the potential buyer down the road is going to have the same concerns you have. And so just factor that into your offer, that down the road you could have some potential, we'll say less of a buyer pool that's buying that property. So you got to get it at a really good deal, knowing that on the exit side of it, you could have some challenges there.
That's right. And if you're considering, a property in a flood zone, it should go without saying, but I'm going to say it. This should be in a prime location with very strong, tenant and resident demand, right? In Florida may be a good example where, it is what it is, and there has a higher risk there than maybe in some other states. And so, if you're in a pocket that all the financial metrics are there and all the economic metrics are there, and you have the proper insurance, then that could be a reason to buy, in that AE flood zone as an example. You just touched on another, but, that's going to be factored in, because if the current owner is paying that flood insurance, that impacts NOI, which impacts the value. So you just need to make sure you're getting a good deal, and walk the property as you're doing your due diligence. Talk to the seller, talk to the broker, talk to the maintenance tech to see what has been done to help mitigate the risk on the property, because the owner may have already taken some steps. But some red flags, some reasons to absolutely walk away is when you look at that insurance loss run and you see flooding, that's probably a walk away for us. I mean, I'd say it is a walk away for us. Once again, we're considering one, but it hasn't flooded in the past. So, okay, we may take a harder look at that. But if I looked at those insurance loss runs and saw it flooded 2 years ago, then I'm just going to walk away, because it tells you that, probably going to happen again. And then obviously you may talk to your broker and the premiums come in such a way it kills your underwriting. So, if you're buying in these areas, just make sure it's an area with above average rental demand. I guess I'll put it that way. It should be a screamer, in terms of demand. And then maybe you make that consideration, but you have to check all those other boxes we talked about.
Yeah, John, maybe I'll just wrap up with kind of some quick insights. So we grew up on a farm, and actually we had chickens and cows growing up. And so at one point, John, we had 11,000 chickens, and we had layers, right, for eggs, because I know egg costs are going up right now.
Oh my gosh, yeah. I go broke every morning making my omelets.
They're super healthy, so keep buying them.
I know, yeah. I'm calculating, it's like every breakfast is like $6 now. I'm like, wait, it used to be like $2. What happened?
But yeah, and then dairy. When I was younger, my parents sold the dairy, and then when I was a teenager when we sold the chickens as well. My dad got into excavating, and so he does like waterproofing around residential just north of Toronto. And so the interesting thing is, as he's getting into that, I started learning more about flooding and why it occurs. And one of the biggest things that causes flooding is grading. And so when you go and buy an asset, it seems very simple, but having properties and knowing that if the grade goes towards the property, even if you're not in a flood zone, there's a good chance you're going to get flooding coming into the property because over time, you've heard the saying, much rain wears the marble. And so you want to make sure that your buildings, that the water flows away from the building. You want to make sure that your downspouts, it's not going back down into the foundation where water over time will erode your foundation and creep in. So that, regular, we'll say, maintenance and common sense when it comes down to flooding is really important, because even if you're in flood zone X, you could still have some flooding if you're not wise with how you're maintaining your property as well. It seems very straightforward and simple, but it's also very easy to miss if you don't have somebody that is paying, we'll say, urgent attention to the property to be able to fix it.
Well, one of our secret weapons, I like to think, is having a construction manager on staff. And we were recently in Atlanta touring a few deals, actually, and it happened to be raining while we were there. And so, you book the travel, you just, you have to deal with it. So we had our rain jackets on. And as we're walking through the property, this is not in a flood zone, not even close. It's actually a very hilly property. But throughout the property, we saw standing water, and then that drew our attention to the downspouts. And you could see a lot of the downspouts were broken. And then Dom's looking to see, well, where does this downspout exit? And then where's that? And then we're seeing that it's broken and it's just dumping onto the ground right beside the building. And it was one that we on paper liked, but as we walked it, we decided this isn't for us. And so, it's not always possible, but walk the property when it's raining or within 24 hours. Because Mark, you said it. I mean, a property that could be nowhere near a flood zone could still have water intrusion issues with poor grading or poor water management. So it's not just something you set and forget. You still have to be very diligent.
And that example, when we started walking around, there was retaining walls with wooden beams. And so they were all overgrown with like ivy. So it was all one big green wall, and it looked fine. Yeah. But then when we stuck our hand through the vines, we hit the wood, and our finger kept going right through the wood. Right through the wood.
They punched the hole right in the
oh my goodness, the wood's all rotten out. And so, John, when we walked the property, as you know, there was we found about 800 feet of 6-foot retaining walls that was pretty much all needs to be replaced.
Yeah.
And so we were like, this is going to be hundreds of thousands of dollars because, it's all rotten. And then, and so it was interesting. So flooding is something that, yes, it can erode into the building, but it can make a major impact on the overall integrity of the property itself that can make a big impact on your wallet, because all that stuff needs to get repaired and replaced. So water flow and drainage it's not sexy, but when it does not go well, I'll just say that it can be very destructive in a big way and wreck a deal. And so that was one of the big reasons why we said we're gonna pass on this one.
That's right. I mean, geez, even when we closed on Largo, they weren't cleaning their gutters, right? So making sure your gutters are clean, making sure your downspouts are clear and that they're exiting properly. So that ongoing, kind of mitigation. So I know for you and I, Mark, I mean, and George is the same way. George is our senior vice president of asset management. But whenever we go to any of our properties, we walk every single property. So we not only go, to the front, but we walk around back of every property. We walk up every flight of steps. We look at every gutter, and we have a 2-3 page checklist that we go through. Just because sometimes, people are there every day, say the maintenance tech, and they sometimes just start to miss things because they're there every day. And so we might come in and go, man, that gutter is looking a little funky there. We might need to have somebody get up there and clean it. So, if you're an owner of investment property, even that single family rental, making sure you're doing regular drive-bys and stop-ins just to ensure everything's going the way it needs to go. Very important.
Yeah, right on. So guys, if you are interested in learning more about how we're taking these deals down, you're interested in learning where multifamily is in the market cycle today and how we are getting 20% annual returns for our investors and what our approach is, go to fulloutinvesting.com. We actually have a landing page there with a full video that I created, a presentation to be able to go over a 10-step full out investing process. And we actually have a sample deal on that same landing page that you can check out. Okay, what does a typical deal actually look like? Go to fulloutinvesting.com where you can learn more. Well, thanks for listening, guys. If you enjoyed the show, please subscribe and share with other high net worth investors that you think will benefit from it. Thanks for tuning in to the Multifamily Investor Playbook. We love and believe in you guys. Keep dreaming and investing big.